So when I asked you amazing people 2 weeks ago, will the property market crash in 2022? I got some interesting results. 26% of you agreed we would see a crash. 51% felt the prices would be even higher next year. And well, sadly, 22% of you were just too hungry to even bother or care. Now, one thing I hope is that you've all eaten since then, as there's nothing worse than being hungry and house prices going through the roof at the same time. But more importantly, thank you all for taking a moment to vote on that, because today's property update video will look at some really important topics that you should all be aware of, especially if you're considering investing either the end of this year or next year, or if you already have properties on your portfolio. Hey, it may even sway your mind about your predictions that you voted on as well too. So as usual, timestamps will be running along the bottom in case you want to jump around, and also just under the timestamps there's a little thumbs up button waiting for you to smash, like now. So according to Halifax, in August just gone, the average house prices have rose by 0.7%, averaging a cost of £262,954. Now, alongside this, they also reported that the annual rate of house price inflation slowed down to 7.1%, which was the lowest since Q1 of 2021. Now, in regards to areas, Wales was 11.6% up year on year, which is incredible, and the Southwest also almost hit 10%, hitting 9.6% growth too, which I suppose kind of makes sense, as there's a bigger demand now, especially since the pandemic, of people wanting to live in rural areas. So people's choices of where they buy houses and the types of houses have definitely changed. Now, London, as usual, and due to its crazy prices anyway, showed a slight lag in prices, only rising 1.3%. Although when you look at the London prices, that's still a hell of a lot of money. And if you're interested, here are some price changes for other regions across the UK too. Moving on, repossession sales. Now, one thing that many people predict if a crash happens is a lot of repossessions. If interest rates rise, for example, and people fall behind on their monthly mortgage payments, or people over leveraged in the first place buying expensive houses just because they thought they got a discount on stamp duty, then as mentioned a few times, repossessions could likely increase. And if anyone is interested in this information, we can see some repossession sales for earlier this year. Now, let's just hope these don't increase next year, although for investors it is a huge opportunity. Next up, furlough and unemployment. Now, I've spoken about furlough many times before, so I don't want to bore you guys again running through that, as you've heard it on many of my property update videos. However, some new statistics that I'd like to share with you is that in June, we had 1.9 million people still on furlough, but this has been shown to slowly start reducing, as of course as the economy has started opening up. And if you love stats like me, then the cost of furlough as a whole from March 2020 to September 2021 is around £66 billion, which is mind-blowing. But on the plus side, it has kept 11.6 million people in jobs. Now, in terms of unemployment at the moment, it's currently less than 1 in 20, which is much better than most experts predicted. And finally, as you guys know now, that furlough is scheduled to end on the 30th of September. Next up, stamp duty. Now, as many of you know and probably took advantage of, the government introduced a stamp duty holiday in July 2020 on the first £500,000 of a home purchase to help ward off the effects of the pandemic. Now, the scheme has been tapered down from the end of June and will finish on October the 1st to a standard limit of £125,000. So we're literally around the corner. Now, along with furlough and this stamp duty holiday finishing, this in my opinion will slow down the rate of sales even more and potentially the growth of the property prices that I mentioned earlier. But let's be honest, the way the world has been moving the past few years, no one truly knows. That's just my 2 cents. Moving on. Concrete and brick prices, and of course materials. Now, a lot of materials have shot up in prices, especially concrete and bricks. Now, contractors are being rocked with 15% price hikes on concrete products, making it very, very difficult for property developers to not only stay afloat, but also get projects over the line or find actual deals out there in the particular market. Now, this is something I urge you all to know in the back of your head before you start a renovation or get into developments. You must increase the contingency of not only more expensive materials, but also take into account lead times as well, guys. This is so important, especially from a project management perspective. With the supply chain for many of these all over the place, you could find yourself having a project last longer than it would have taken maybe 2 or 3 years ago. And as we all know in this game, time is money. And finally guys, other than liking this video, we're going to speak about renting. Now the cost of renting has hit record highs, as many of you probably know. Just last month in the UK, the average rent exceeded £1,000. It hit £1,053, which was up 6.9% when compared with last year. Now this included London, but if we take London out of the equation just for a moment, the average UK rent still actually went up by an even higher percentage, a staggering 8.1%, with the average rents hitting £892 per calendar month. Wales also hit £723 per calendar month, rising by 12.8% year on year. So the cost of overall living has really increased for the majority of us across the UK. Now, before we close this update video, there are some questions and predictions I'd like to end this video with. I remember predicting almost a year ago that we may see the bubble start to pop around Q4 of this year. And with furlough and stamp duty now coming towards an end, and the overall cost of living just increasing literally day by day, I'm still confident we're gonna see a slowdown in the rate of sales and price growth. Heck, maybe even a mild crash in 2022, although the exact amount, who knows. And I also predict a higher demand for rural areas in terms of house buying to maybe still stay strong, and the demand for properties with gardens and more outdoor spaces to probably remain the most competitive across the board. And also in regards to buying a home, I think we will all follow the same pattern that we pretty much do every year, that March is generally the best time to buy. It's considered the best time to buy a house due to more houses generally being on the market in and around the springtime. So maybe wait until then and see where the market's at. And with that, my good friends, that is all I have for today. I hope you found some of this useful, and I also want to thank you guys if you managed to stick around to the end of this video when you guys could have been doing anything, but you chose to spend a few minutes with me. That makes you a kind of awesome person, and also makes my day too, along with liking this video. So guys, until next time, have an awesome day, and I look forward to seeing you next time. Thanks for watching. So we're literally weeks away. So we're literally then, and there's nothing worse than being